Good afternoon and welcome to Markets Today. I'm your host, Mbitha Mwema. It's a new week. It's the last day of the month of September, the 30th of September 2019. We're excited to be here giving you insights of what to look out for the week ahead, as well as giving you a recap of what happened last week. Today, we'll just be talking about what was happening with regards to the foreign and the local investors in as far as trading is concerned. We'll also be giving you a recap on the corporate news that came through last week on the NSE listed stocks. Some of them will be giving you details of that. We'll also be giving you an overview of some of the decisions that were made at a fiscal level as well as at a legislative level. Over and above that, we'll be taking a deep dive on the MPC and the use of the CBR rate as a tool for managing the CBK operations and really just targeting on inflation. For that conversation, we do have Mr. George Bodo. He is a director at Call Street Research and Analytics. We'll be taking that deep dive later on in the show. But first, a recap of what happened last week on the NSE. With regards to turnover, this was slightly down, about 7.5% week on week to about 2.6 billion shillings traded last week. The top traded stock was Safaricom, 40 million shares traded and closing the week at 27.1 shillings. The foreign investors accounted for 78% of stock activity with regards to turnover that was traded last week. This is nothing new. They typically tend to be about 70% of the market. Slightly up last week, 78%, but nothing new there. The foreigners are actually interested in buying more of Safaricom, KCB, Cooperative Bank and Centum Bank. With regards to their selling activity, they were sellers, rather net sellers of Equity Bank last week. A couple of news actions actually came out with regards to corporate activity on the NSE. Top of mind was Mumia's Sugar, which was put under receivership by its largest holder. Following that decision, it has actually been suspended on the NSE and there's nothing happening with regards to trading on this particular stock. At the River Mining, that had also been suspended earlier on in the year, has also seen an extension by 9 months of the trading of this particular stock. It has also gone into receivership, and there has been a lot of conversation with the different stakeholders, equity holders, as well as debt holders, as to what is the best action going forward. That said, this stock will now be extended, will now be suspended for an extended 9-month period. Last week was also the week that we saw the MPC sit. This is the Central Bank of Kenya Monetary Policy Committee, and it left the benchmark rate unchanged at 9%. And finally, last week we saw the legislature, that is the MPs, come out and strongly say they are against a rate cap decision. The finance committee said that it was better to actually leave the rate cap unchanged as it were and continue with that regard. The final decision that came from the legislature last week was regarding the excise tax duty. They did come out and say that they wanted an amendment to the inflationary adjustment, which would see this excise tax go to about 21% for the current fiscal year. On Saturday, we did see the alcoholic companies in Nairobi, rather in Kenya, as well as the tobacco companies come together and issue a joint statement in the local dailies, saying they were not averse to the fact that the government was looking to raise taxes from your sin goods, typically alcohol and cigarettes. But they did say that they were averse to the modalities and the framework that had now newly been proposed, saying a 21% increase based on the new proposal would actually be detrimental to their businesses. Certainly, this news comes after the fact that we've seen a couple of betting companies actually decide to close shop in Kenya, and that's Betting and SportPesa. And they have cited the fact that the tax regime in Kenya is actually detrimental to their business model and their operations, and they have closed shop. The question is tax going to be a heavy burden not only for corporates but for the individual? And if that happens, what does that mean for economic growth? And as always, what does that mean? What does that mean for the investment case for the listed stocks on the NSE today? That's a conversation we will be looking at later on. But today we're taking a deep dive and evaluating the essence or the feasibility of using the CBR rate as a benchmark rate by the MPC as well as the Central Bank of Kenya. Mr. George Bodo is a director at Call Street Research and Analytics. He'll be giving us his views based on a report that he published last week in the local dailies. We take a short break. Daily Commodities, as always, we are streaming live on our Facebook page as well as our YouTube page. That is Metropole TV. Don't go anywhere. Tap somebody next to you, ask them to join us as we do our live stream. We take a short break on the Daily Commodities. See you shortly.